Have you ever wondered how far you can go as a company partner to get information? In the day-to-day of partner meetings, many questions come up. Today, we're going to break down 10 of the most common ones about the right to information based on 2025 standards and, most importantly, on the good faith that should exist between partners. The right to information is a powerful tool to protect the minority partner, but its main support is good faith. The Supreme Court is clear. If you use this right in a bad way, the courts will not rule in your favor. It's a tricky balance, and the answers are not always clear-cut. First question, can you ask for a copy of all accounting records from the journal to the ledger for a meeting? It's not an unlimited right. It depends on the size of the company and how it relates to the meeting's agenda. If you're going to approve accounts for 1 year, you can't ask for the previous years. And most importantly, the information must be key for your vote. If you ask for a very detailed breakdown that has little to do with the yearly accounts and more with a personal conflict, it won't be allowed. Next question, can you ask for a list of employees and their full salaries? This is where data protection comes in. The best way is to use a format where names are hidden, with codes to protect privacy. The information must be needed and key to understand the financial reports. It's not for unfair use. And what about the breakdown of what each director or administrator earns? Here, if the administrator is also the main partner, judges usually see this as key. Watch out for unfair agreements that benefit the main partner at the expense of the smaller partner. If the information is not in the annual accounts, it's better not to deny it. In short, a smaller partner can ask for details about staff policy, contracts with suppliers or customers, and any other matter that has affected profits. This is important to find possible favoritism or unfair treatment. Do you have the right to have the information sent to your home? While it's common, the law doesn't require it. In fact, immediate delivery suggests you should pick it up at the company's main office. If you ask for home delivery, don't expect it to be instant. How far in advance should you receive the information? Giving it the day before the meeting is seen as acting in bad faith. The more time in advance, the better. And again, the amount of information asked for matters. If you are an administrator, things change. You are expected to already have the necessary information. And you cannot complain about lack of information if you did not try to get it when you had the chance. A shareholder with more than 25% has a wider right, but it's not without limits. You cannot ask for information that would mean breaking laws or going against secrecy agreements. And pay attention, European law can be more important. If information about internal prices or private data could lead to unfair business practices, it can be refused. Lastly, is the right to information just asking and getting answers, or also getting documents? A key ruling makes it clear that it's the right to ask and get a reply, not necessarily to be given all documents. It also doesn't include judging other ways to make management decisions. The right to information is a key part of company life, but it must be used thoughtfully and in good faith. We hope these answers are helpful to you. This is just one part of our series, Meeting Times. In the next video, we'll talk about unfair majority agreements. Don't miss it. Focus your questions and challenge our AI Atenea. Complex questions, expert answers. More information at ilpabogados.com.